All right, let's talk about something that trips up so many Forex traders: timing. Today, we're going to crack the code on the hidden clock of the Forex market. This is all about turning your strategy from random guesswork into a precision-timed machine. I mean, seriously, have you had this happen? It's the worst feeling. You have an amazing morning, your strategy feels unstoppable, and then bam, the afternoon session just completely wipes out all your hard-earned gains. It feels totally random, but I promise you it is not. You see, the secret weapon that separates the consistently profitable traders from everyone else, well, it isn't always some super complex new strategy. So often, it just comes down to one single crucial element: your timing. Knowing when to trade is every bit as important as knowing what to trade. So here's our game plan. First, we're going to bust the whole 24-hour market myth. Then, we'll take a quick trip around the globe, diving into the Asian, European, and North American sessions. And then, we'll wrap up by getting super practical, helping you find your personal golden hours and showing you the red flags you absolutely need to avoid.
Okay, first things first, let's tackle this huge misconception. Yes, the Forex market is open 24 hours a day, 5 days a week. But, and this is a big but, that does not mean it's a good idea to trade at all hours. Thinking you can trade around the clock is honestly just a recipe for disaster.
You see, the market moves in waves, and these waves are driven by what we call trading sessions. The easiest way to think about them is as the official business hours for the big financial hubs like Tokyo, London, and New York. When their banks and big institutions are online, that's when the market really comes alive.
And this right here perfectly illustrates why timing is everything. Look at the difference. During high activity periods, you've got tons of volume and liquidity. That means lots of buyers and sellers. This gives you tighter spreads, which actually lowers your trading costs. But in those low activity periods, you get wider spreads, which costs you more, and there's a much higher risk of slippage, which is when your order gets filled at a worse price. The takeaway here is simple. You want to be fishing when the fish are biting.
So let's start our world tour with the first major session of the day. Welcome to the Asian session, which you'll often hear called the Tokyo session. I like to think of this as the quiet, early morning strategist of the market. So here are the operating hours. Now, if you're in Europe or the Americas, you'll notice this is probably happening while you're fast asleep. It's what kicks off the trading week on Sunday evening, and it often sets a pretty quiet initial tone for the day to come. This session, it's got a really distinct personality. It's known for lower volatility and a lot of consolidation. That just means prices tend to bounce sideways in a pretty defined range. It can be tough for breakout traders for sure, but it can be an absolute goldmine for scalpers and anyone who loves trading ranges. It makes sense, right? This is when the currencies from the region are most active. So you're going to want to focus on pairs with the Japanese yen, the Australian dollar, and the New Zealand dollar. This is when they'll have the most liquidity and usually the tightest spreads. And this quote just sums it up perfectly. If your strategy thrives in calmer waters, and you really want to avoid those massive, unpredictable price swings you see later in the day, the Asian session could be your ideal trading window. But hey, if you are looking for those big waves, then let's move on to the heart of the trading day, the European session. Most people call it the London session. This is when the market truly explodes with energy and volume. You can see London's hours put it right smack in the middle of the global trading day. If you're trading from the US, this is your early morning wake-up call, and believe me, it's when the market's real action kicks into high gear. And the vibe here is the complete polar opposite of the Asian session. We are talking about the highest volatility and the highest trading volume of the entire day. The spreads get razor thin and powerful trends can form, making this the perfect hunting ground for trend followers and breakout traders. So, which pairs should you have on your watch list? Pretty simple. Anything with the euro or the British pound. The EUR-USD and GBP-USD are the undisputed kings of this session. They offer incredible liquidity and some really nice movement. Now, listen up, because this is a huge pro tip. That first hour, right around 8 a.m. GMT, when London officially opens, is legendary in the trading world. It often triggers massive, decisive moves as a flood of institutional money just pours into the market. You need to pay close attention to that window.
And that brings us to the final major act of the day, the North American session. When New York opens its doors, it adds another powerful jolt of volatility, especially since it overlaps with London for a few hours. So here are the times for the New York session. And the key thing to notice is that for several hours, it runs at the same time as the European session. This overlap creates the single most liquid and active period of the entire trading day. What makes this session tick? Well, it's defined by very high volatility, and it's heavily influenced by major U.S. economic data releases. We're talking about things like non-farm payrolls, CPI inflation reports, and Fed announcements. These events can move the market hundreds of pips in just minutes, which makes this session a prime time for news traders. As you'd probably guess, any pair involving the US dollar is going to be front and center here. And since the USD is the world's reserve currency, any big moves during this session tend to create a ripple effect across the entire market. And here's another really critical piece of advice. That overlap period, from about 1230 to 1600 GMT, is what many traders consider the golden hours of Forex. You've got the world's two largest financial centers trading at full tilt. That first hour of the New York Open, in particular, is one you have to watch very closely. Okay, so we've toured the market's clock. Now for the most important part of all. How do you choose the right session for you? How do you find your own personal golden hours? Well, it really just comes down to these three simple steps. First, your time zone. This one is non-negotiable. Please, do not sacrifice sleep to trade. Trading while you're exhausted is just a surefire way to make bad emotional mistakes. Second, match the session's personality to your trading style. Are you a breakout trader who needs that volatility, or are you a range trader who prefers the quiet? And third, you have to be honest with yourself about your risk tolerance. Don't go jumping into the London Open if you can't stomach those wild swings. And finally, just as important as knowing when to trade is knowing when not to. So let's quickly cover some major red flags that will help you protect your capital. You really want to avoid Friday afternoons. Liquidity just dries up and spreads get wide. Stay away during major holidays too. The market is thin and unpredictable. If you don't like a lot of risk, maybe sit on the sidelines during those big central bank announcements. And like we talked about, don't try to force a breakout strategy on the quiet Asian session. And most importantly, do not trade when you are tired. Your judgment is your greatest asset. Protect it. So here's the bottom line. The market has a rhythm. It has a pulse that beats in time with the opening and closing of financial centers all over the world. By understanding this clock, you can align your strategy with the market's most powerful currents instead of constantly fighting against them. You have the map now. The only question is, how are you going to use it?